Singapore's core inflation is continuing its downward trend after hitting a 14-year high at the start of the year. Core inflation, which excludes accommodation and private transport costs, stands at 4.7% in May. That's down from 5% the month before. This decline driven by a drop in prices of services and food. Overall, inflation has fallen to 5.1% compared to April's 5.7%. Singapore's central bank says this decline is largely due to falling inflation in private transport, as well as a lower core inflation.
Going forward, MAS expects inflation to moderate in the second half of the year as imported costs drop and the tight labour market eases. But one analyst is cautioning about the risks in the months ahead.
There could be sticky prices in the horizon, especially in the view of the El Nino conditions that might happen, in the second half of this year. That's one. And also, if we have, more exacerbated geopolitical tensions, if any, in the second half, and that may inject the upside risk to commodity prices and, may revisit the supply chain congestions and could overall lift global inflation. And, Singapore being a price taker and a small and open economy will be very vulnerable to commodity prices fluctuations, in the near term.